All right, everyone, welcome back to TalkTickers. Ready to jump into another earnings call.
Let's do it.
Today we're looking at Tilly's, their Q4 and full year 2024 earnings call, which they just had on March 12th, 2025.
Yeah.
And we'll be picking apart those numbers, getting into management's take on things, and of course, wrapping it all up with a not financial advice, crazy trade idea.
Yeah, I think Tilly's had a rough quarter. There will be lots to unpack.
Definitely.
Yeah.
Yes. So big picture first. Tilly's sales were down this quarter, total net sales fell 14.9% compared to last year, ending up at $147.3 million.
Right. And, comparable net sales, which include, both physical stores and online, those also dropped by 11.2%.
Wow. So not a one-time blip.
No, not just a one-time thing. It is worth noting that last year's Q4 had an extra week, which added about $5.7 million to those sales.
Okay. So it wasn't just a calendar quirk.
No, not entirely.
Got it. All right. So let's get granular with those sales numbers.
Sure.
Physical stores versus online. What's the story there?
Well, sales at physical stores decreased 13.7% and accounted for about 73.5% of their total net sales.
Okay.
And if you compare that to the same 13-week period last year, physical store sales were down 9.8%.
All right. So not great, but maybe not as bad as that initial number made it sound.
Yeah, exactly.
What about their e-commerce? That's where everyone's shopping these days, right?
You would think, but their e-commerce sales actually dropped even more by 17.8%, making up the remaining 26.5% of total sales.
So a double whammy, both online and in store are down.
Yeah, both hurting a little.
That paints kind of a gloomy picture.
Yeah, a little bit.
What about their store count? Did they say anything about opening or closing locations?
Yeah, they ended the year with 240 stores, which is 8 fewer than last year.
Okay.
And in Q4 alone, they closed 10.
Right. So scaling back a bit makes sense. All right, money time. What about Tilly's margins and expenses and all this?
Okay, so their gross margin, which covers all the costs directly related to making and selling their products, came in at 26% of net sales, which is a little lower than last year's 27%.
Okay, so a slight dip in profitability there.
Yeah.
But hold on. Their product margins actually improved this quarter by 190 basis points.
Yeah, that's right.
Thanks to higher initial markup. So that's a good sign, right?
It is. It means they were able to price their products higher, potentially make more profit on each item. But the thing is, their buying, distribution, and occupancy costs all went up as a percentage of sales.
So it's like they're making more on each item,
right,
but selling fewer overall, and those other costs are eating into those gains.
Exactly.
Okay, what about SG&A? That's marketing, salaries, all that good stuff.
Right. Their total SG&A expenses were $52.4 million, which is 35.6% of net sales.
Okay.
Now, that might sound like a lot, but it's actually down from $55.2 million last year.
So they're spending less overall.
Yeah.
But it's still a bigger chunk of their sales because those sales have dropped.
Yeah.
Tricky situation.
Yeah.
Did they manage to stay profitable despite all this?
Sadly, no. They reported a pre-tax loss of $13.4 million, about 9.1% of net sales.
Okay.
And last year, they actually had a smaller loss, but last year's number included a big one-time accounting charge, so it's a little messy to compare directly.
Okay, so some accounting shenanigans.
A little bit, yeah.
All right, what about their balance sheet? Always gives you a picture of their overall financial health.
Definitely. They ended the year with $47 million in cash and marketable securities and had access to another $48 million from their credit facility.
So some breathing room?
Yeah, a little cushion there.
And what about their inventory? That's always a key thing to look at for retailers, especially when sales are slowing down.
For sure. So their total inventories were actually 9.5% higher than at the end of fiscal 2023. But as of March 1st, 2025, their inventories were down 6.1% year over year.
Okay, so mixed bag there, but it seems like they're trying to get a grip on that.
Yeah, they're working on it. They even mentioned implementing a strategy to reduce inventory commitments throughout fiscal 2025.
So they're recognizing they might have too much stuff on hand and are taking action.
Right.
Okay, so all this is fine and dandy, but what's management's take on this less than stellar quarter?
Well, they admitted that Q4 was a bit of a letdown, especially after seeing their best comparable sales performance since 2021 in Q3.
Yeah, quite a swing.
Yeah, a big swing.
Ouch.
Oh.
What do they blame for this downturn?
They pointed to challenges their traditional brand partners are facing.
Okay.
Apparently, those brands are having their own set of struggles, which is trickling down to Tilly's.
So it's not just Tilly's, it's the suppliers feeling the heat too. It's a whole domino effect.
Yeah, exactly.
So what are they doing to try and turn things around? Any specific strategies?
They highlighted a couple of key moves. First, they made changes to their merchandising team during Q4, hoping to refresh their product selection and reverse that sales trend.
New leadership can sometimes be a game changer.
Definitely.
What else?
They're also doubling down on inventory management, going for significant reductions in their inventory commitments throughout fiscal 2025. The goal is faster inventory turnover and hopefully boosting those product margins even more.
Yeah, makes sense.
Yeah.
Keep things fresh and, not tie up cash in unsold merchandise.
Right.
Any mention of cost-cutting measures?
Absolutely. They're aiming for big expense reductions in fiscal 2025. They're looking at everything, store leases, payroll across all levels of the company, even renegotiating vendor contracts.
Wow, so they're pulling out all the stops.
Yeah.
Not messing around.
Yeah.
So what about the future outlook? Are they optimistic or preparing for more tough times?
Well, they're cautiously optimistic about their spring collection. They even mentioned seeing positive sales in stores when the weather warmed up for a bit, suggesting that those merchandising changes might be starting to work.
Fingers crossed that continues.
Yeah.
Did they give any specific guidance for Q1?
Yeah. They're estimating total net sales for Q1 to be somewhere between $105 million and $111 million, which would mean a comparable store net sales decrease of about 8% to 3% compared to last year.
So still expecting some softness.
Right.
But hoping for less of a drop.
Yeah, exactly.
Okay, cautiously optimistic, but realistic.
Yeah.
What about their profitability? Any projections on earnings or margins for Q1?
They're projecting SG&A expenses to be around $42 million to $43 million, and they're anticipating a pre-tax loss between $20 million and $17 million.
Okay.
That would put their estimated loss per share somewhere between $0.68 and 58 cents for the first quarter.
Not exactly a rosy picture.
Not yet.
But it sounds like they're managing expectations and trying to navigate this tricky situation.
Right, they are.
Did they talk about capital expenditures or plans for new store openings in the coming year?
Yeah, they confirmed opening one new store recently, with another one planned for August.
Okay.
However, they also have 7 store closures in the works.
Wow.
And hinted that there might be even more depending on lease negotiations.
So it sounds like they're focusing on profitability over, rapid expansion, making sure each store is really pulling its weight.
Yeah, being strategic.
Exactly, being strategic and making sure every dollar counts.
For sure.
Now, let's look a bit closer at their financial position. What did they say about their cash flow and how they're handling their credit facility?
Well, they're expecting their cash balance to fluctuate throughout the year, ending Q1 with about $25 million to $30 million.
Okay.
But the good news is they believe they can operate without borrowing any money from their credit facility during fiscal 2025.
That's always a good sign.
Well, it is.
Shows confidence in their ability to generate cash and manage things.
Right.
Any mention of potentially extending their credit facility just in case?
Actually, yeah, they're expecting to finalize an extension of their credit facility with Wells Fargo Bank, pushing it out to July 2028.
Okay.
They're aiming to have that done before the end of the first quarter.
So it's like having an extra safety net, even if they don't think they'll need it?
Right. Better to be prepared.
Absolutely. Now, before we jump into some wild trade ideas, let's take a step back and consider Tilly's situation in the broader retail world.
Okay.
What does their story tell us about the challenges and opportunities retailers are facing right now?
Well, I think their struggles with traditional brand partners is a big red flag. It suggests that many of these big established brands are having trouble keeping up with changing consumer preferences and the shift to online shopping.
So it's not just Tilly's, it's like a ripple effect through the entire industry.
Yeah, a domino effect.
If the big brands are struggling, it's going to impact anyone who relies on them.
For sure. It shows the importance of diversifying your brand mix, maybe finding some new partnerships or really leaning into those private label products.
Like they need to become chameleons, constantly adapting and evolving to stay ahead of the curve.
Right.
What other trends are you seeing?
Their intense focus on inventory management is another big one. That determination to reduce their inventory commitments and boost those turnover rates reflects what a lot of retailers are doing. Being more cautious about overstocking, especially with the economy being a little shaky right now.
It's a high-stakes game at Tetris.
Exactly.
Trying to fit the right pieces in the right places at the right time.
And avoid a big mess.
Exactly.
Yeah.
And we can't forget about their commitment to cutting costs They're scrutinizing everything, renegotiating contracts. It's like survival mode activated.
Totally. With rising costs and shrinking margins, retailers have to be more efficient.
Yeah, you can't just keep raising prices forever.
No, absolutely.
So it's all about operational excellence, doing more with less.
Right.
Now, Tilly's seems to be betting big on their new merchandising strategy to turn things around. What do you think of that approach?
Well, I find their focus on key items interesting, making sure they have enough of those core products. It's a move away from chasing every trend, focusing on those consistent sellers. And it seems they're putting a lot of effort into really understanding their target customer.
Yeah.
Using data to guide their decisions, which is key.
It's a data-driven world.
Absolutely.
Got to use that data.
For sure.
Okay, let's talk digital strategy. We've touched on e-commerce and digital marketing, but where do you see their overall digital approach heading?
Well, I think they need to keep investing in their online platform, make it user-friendly, engaging, all of that.
Okay.
Stay ahead of the curve with mobile optimization, personalization, and using social media to connect with their audience.
Yeah, it's about creating that seamless, exciting experience online, making people want to come back for more.
Exactly. It's not just about having a website. It's about creating a whole digital ecosystem that reflects their brand.
Right, and let's not forget those brick and mortar stores. How do you see Tilly's balancing those digital investments with maintaining a strong physical presence?
That's the million-dollar question for every retailer these days.
It is.
They need to find a way to make those online and offline channels work together, using their physical stores to showcase their brand, offer that personalized service, and maybe even use them to fulfill online orders more efficiently.
So it's about creating that seamless omni-channel experience, blending the best of both worlds.
Precisely. Recognize that customers shop in different ways and make sure the experience is good no matter how they choose to engage with the brand.
Okay, so we've covered a lot of ground here. Let's take a breath and recap some key takeaways from Tilly's earnings call.
Yeah.
What should our listeners remember?
All right, so first, Tilly's sales are down. That's affecting both physical stores and online.
Yeah.
They're closing some stores, but also strategically opening new ones in locations where they see potential.
It's a strategic game of chess with those store locations.
All right, their margins are a mixed bag. Their gross margin dipped a bit, but their product margins actually improved. However, those other costs are rising as a percentage of sales, eating into their profits.
A reminder that even when you're doing some things right, other factors can create challenges.
Yeah, for sure.
What else?
Inventory levels are something to watch. They were up initially, but they're taking steps to reduce those commitments going forward.
Trying to find that sweet spot, having enough inventory to meet demand without being stuck with a bunch of unsold stuff.
Right, exactly.
All right, anything else?
Yeah. Lastly, Tilly's is being proactive about cutting costs and managing their finances.
Yeah.
They believe they can operate without borrowing money, and they're extending their credit facility just in case.
So tightening their belts and getting their house in order.
Exactly.
It sounds like they're aware of the challenges and are actively addressing them.
Yeah, definitely.
Not just hoping for the best.
No, taking action.
So that's a good sign.
It is.
Well, I don't know about you, but I'm ready to put on my speculative hat and brainstorm some crazy trade ideas.
Let's do it. I'm always up for that.
Remember, everyone, these are just hypothetical scenarios, not investment recommendations.
Right, just exploring possibilities.
What crazy idea have you cooked up?
Okay, so Tilly's is clearly having a rough time. Their stock price is probably taking a hit.
Right.
But what if, hear me out, what if this actually creates a unique opportunity?
Okay, I'm listening.
What if we play the contrarian card and bet on a short squeeze?
Ooh, a short squeeze. I like it. That's when the stock price jumps up, forcing those who bet against the stock to buy it back, which can drive the price even higher.
Exactly.
But how would that work with Tilly's?
Well, with all the negativity around Tilly's right now, chances are there are a lot of investors shorting the stock.
Yeah, betting it'll keep falling.
Right. But if Tilly's manages to beat expectations even slightly in the next few quarters, it could trigger a wave of short covering, sending that price soaring.
That's a bold move, but I see how it could work.
Yeah. It's definitely plausible.
And with the right option strategy, you could really amplify those returns.
For sure.
But it's definitely risky.
Absolutely. High risk, high reward.
No guarantee that Tilly's can turn things around that quickly.
Right. It's all hypothetical, just a fun thought experiment.
Remember, everyone, this is not financial advice. Always do your own research. Talk to a financial advisor before making any investment decisions.
Absolutely. Always.
All right, so let's shift gears a bit and talk about Tilly's journey within the larger retail landscape. What lessons can we take away from their experience? What does it tell us about where retail is headed?
I think Tilly's story is a perfect example of how crucial it is for retailers to be adaptable, agile, and super customer-focused in today's world.
Yeah, it's a constant reminder that even established brands have to constantly innovate and evolve to stay relevant.
Right. They can't just sit back and relax.
They can't rest on their laurels.
No, they have to keep pushing forward.
Okay, so what else?
They also have to be laser-focused on operational efficiency and cost control to navigate the ups and downs of the market.
Makes sense, especially with rising costs and shrinking margins. And perhaps most importantly, they have to build strong relationships with their customers, create an experience that really resonates with them.
Absolutely. Brand loyalty is super valuable in a world with so many choices.
For sure.
Definitely.
All right. Well, that wraps up part 1 of our deep dive into Tilly's. We covered their financial performance, their strategic initiatives, and some of the bigger trends shaping the retail landscape.
Yeah, we did.
We also had some fun brainstorming a not financial advice trade idea, but remember everyone, always do your research, make informed decisions.
Absolutely, always.
Stay tuned for part 2, where we'll dig even deeper into Tilly's story and their long-term outlook.
Sounds good. All right, welcome back to Talk Tickers. Ready for part 2 of our deep dive on Tilly's.
You bet. You know, I always find the Q&A portion of these earnings calls to be like the juiciest part.
Yeah, for sure.
You know, where the analysts really dig in and try to uncover those hidden nuggets of information.
Yeah, get those insights.
What stood out to you during Tilly's Q&A?
Well, right off the bat, one analyst brought up tariffs, specifically how they might impact Tilly's private label products, you know, the stuff they design and sell under their own brand.
Yeah, those tariffs, always a hot topic.
Always, yeah.
Were they freaking out about how those tariffs might affect their costs?
Actually, they kind of downplayed it, at least for now.
Interesting.
They said only one of their private label vendors had even mentioned splitting the extra cost from tariffs. And even then, it wasn't a huge amount.
So not a major concern at the moment?
Not yet, no. But we all know things can change fast in the global trade world.
Oh, yeah, absolutely.
Things can shift quickly.
For sure.
So what else came up in the Q&A?
Yeah, what else were those analysts digging into?
Well, they were curious about how Tilly's plans to deal with this whole uncertain economic climate.
Oh, yeah.
Everyone's worried about a potential recession and how it might affect consumer spending.
Yeah, that's the big question on everyone's mind these days.
Absolutely.
So what did Tilly say about that? Were they optimistic or getting ready to hunker down?
They definitely acknowledged the challenges, but they seemed, I don't know, cautiously optimistic.
Right.
They sounded pretty confident that the changes they're making to their product lineup will help them through any tough times.
So hope for the best, prepare for the worst kind of approach.
Yeah, I think so.
Sensible.
Yeah, makes sense.
Did they give any details on those store openings and closings for this year? I know we mentioned a couple earlier.
Yeah, they did.
Okay.
They confirmed that recent new store opening and the one scheduled for August, but they also said they've already earmarked 7 stores for closure.
So a net reduction in their store count.
Yeah, it seems like it.
Makes sense in this climate.
Yeah, definitely.
What about their capital expenditure plans? Did they mention how much they're planning to invest in things like new stores or tech?
They're taking a wait-and-see approach.
Okay.
They said they're open to investing in new stores, but only if they're really confident they'll see a good return.
Smart move. Got to be selective these days.
Yeah, absolutely.
No room for risky bets.
No, not really.
What about their e-commerce strategy? Any updates on that front?
One analyst asked a really interesting question. They wanted to know if Tilly's had considered fulfilling online orders directly from their stores, you know, instead of using a separate fulfillment center.
Oh, that's a great question. Some retailers have done really well with that model.
Yeah, it can be more efficient.
It can be, getting those orders to customers faster.
Yeah, and managing inventory.
So what did Tilling say?
They're already doing a kind of hybrid model.
Okay.
Fulfilling most orders from their e-commerce warehouse, but they also ship from stores if an item isn't available in the central warehouse.
So they're already using their stores as fulfillment hubs to some extent.
Yeah, exactly.
That's pretty cool.
It is, yeah.
Did they hint at any plans to go all in on store fulfillment, like completely ditching the central warehouse?
Not at this point. They seem happy with their current setup, but, you know, they're probably keeping their options open.
Yeah, you never know what the future holds in the e-commerce world.
Absolutely. It's constantly changing.
Got to stay flexible.
Right.
Now, we touched on their cash balance earlier, but I'm always curious about how companies are managing their credit lines.
Yeah, me too.
Did Tilly's say anything about whether they might need to borrow money?
They said their goal is to operate without using their credit facility during fiscal 2025,
Okay.
assuming their sales stay relatively stable.
So aiming to stay debt-free if possible.
Yeah, which is a good sign.
It is, shows they're being careful with their finances.
Right.
Did they say what would make them change their mind and actually use their credit line?
They said they might consider borrowing if their comparable store sales were to, consistently drop by like 10% or more.
So they got a plan B in case things get really rough.
Yeah, exactly. A backup plan.
Which is always smart.
Yeah.
We talked about inventory earlier, but it's such a big deal for retailers that I wanted to circle back to it.
Okay.
Did they give any more detail on their plans to, slim down those inventory levels?
They basically reiterated their commitment to operating with lower unit inventories throughout the year.
Right.
They really stressed that they've taken a very, detailed approach to figuring out their inventory needs, going category by category.
So no more guesswork.
No, much more strategic.
Using data and careful analysis.
Right.
Did they give any hard numbers on their inventory reduction goals?
No, not really.
Okay.
But they emphasize that their goal is to get back to those historical inventory turnover rates they achieved in the past.
Back to the good old days.
Right.
Sometimes the classics are the best.
Yeah, sometimes.
What about their overall SG&A expense reduction plans? Any more specifics on how they plan to cut costs?
Yeah, they did get into some specifics, highlighting a few key areas they're focusing on.
Okay, tell me more.
So first up, they're being very careful in their store lease negotiations, trying to lower rents or get better terms.
That makes sense. Got to make sure they're getting the best deals possible.
Right.
What else?
They're also really focused on payroll management across all areas of the business, from stores to distribution centers to the corporate office, implementing stricter controls on staffing levels and overtime hours.
So looking for efficiencies everywhere.
Yeah, exactly.
Leaving no stone unturned.
No, not at all.
And what else?
They've also been working with their vendors and suppliers, renegotiating contracts to try and get lower prices on goods and services.
Smart move. Got to leverage those relationships.
Definitely.
Now, let's talk about their merchandising strategy, which seems to be the core of their turnaround plan.
Okay.
What insights did they share about how they're revamping their product assortment?
Well, they didn't reveal everything, but they did emphasize that they've made some big changes to their merchandising team and their overall approach.
Okay.
They're now focusing more on what they call key items, making sure they have enough of those core products in stock.
So it's kind of back to basics.
Yeah, exactly.
Focusing on what consistently sells.
Right.
And making sure they have enough to meet demand.
Yeah.
Did they mention any specific product categories or trends that they're super excited about?
They said they're very confident in their spring assortment, especially after seeing how well some of those new spring items sold during that warm weather we had.
Ah, so some early positive signs.
Yeah, hopefully that continues as it gets warmer.
Fingers crossed.
Yeah.
Did they elaborate on any specific categories within the spring assortment?
Not really, but they sounded optimistic about refreshing their offerings and staying ahead of trends.
So a little bit of a mystery.
Yeah, a bit of intrigue.
Should be interesting to see how it all plays out.
Definitely.
Now, they mentioned some challenges with their traditional brand partners.
Right.
Did they go into any more detail about that?
They could, yeah.
Okay.
They explained that a lot of those long-standing brands are facing their own problems.
Yeah.
Which is making it tougher for them to deliver products on time with the quality Tilly's expects.
It was like a chain reaction.
Yeah, exactly.
Tilly's has its own issues, but it's also dealing with external pressures from its suppliers.
Yeah, tough spot to be in.
It is. So how are they addressing that? Are they looking to bring in new brands to, mix things up a bit?
It sounds like they are.
Okay.
They're exploring new brand partnerships, trying to go beyond those core brands.
Makes sense.
And they're also focusing more on their own private label products.
Smart move that can give them more control over their supply chain.
Yeah, and potentially higher profits.
Exactly.
Did they drop any names of those new brands they're bringing in?
Yeah. Any hints?
No, not really, but they said they're looking for brands that align with their target customer and offer something unique.
So a strategic approach to diversification.
Yeah, definitely.
Okay, let's move on to their marketing strategy. They mentioned plans to boost their marketing spend.
Right.
Did they give any specifics on which channels or initiatives they're planning?
Yeah, they highlighted a few key areas they're focusing on. They want to expand their digital marketing, put more emphasis on targeted online ads and social media campaigns.
Makes sense. That's where everyone is these days.
Yeah, it is.
What about more traditional marketing like print or direct mail?
They didn't really say much about that.
Okay.
Their focus on digital suggests they're shifting away from those older channels.
Yeah, digital is where the data is.
For sure.
Got to follow the data.
Exactly.
And one thing we haven't talked much about is their actual store operations.
Right.
Did they discuss any plans to improve the in-store experience or make things more efficient?
They didn't go into a lot of detail, but they did mention ongoing efforts to improve store layouts, customer service, and streamline processes.
So focusing on the fundamentals.
Yeah, the basics are important.
They are. Sometimes those small changes can make a big difference.
For sure.
Do they mention any new tech or innovations they're using to improve store operations?
They didn't get into specifics about tech, but their emphasis on efficiency suggests they're open to new tools and systems that could help.
Yeah. Got to work smarter, not harder.
Absolutely.
Especially in this ever-changing retail landscape.
For sure.
Okay. Switching gears a bit. They mentioned changes to their merchandising team, any other personnel changes or organizational restructuring.
They didn't mention any other specific moves, but, their focus on cost cutting and efficiency suggests there might be some streamlining happening behind the scenes.
Okay, so a leaner, more agile organization.
Yeah, could be.
Which is often a good thing in tough times.
Right.
Shows they're willing to adapt to make tough choices.
Definitely.
Now, let's talk long-term vision. Did they give any insights into their strategic goals and aspirations for the future?
They didn't paint a grand vision, but their actions suggest they're focused on stabilizing the business, boosting profitability, and setting themselves up for sustainable growth over the long haul.
So a practical step-by-step approach.
Yeah, I think so.
Makes sense in this uncertain environment.
Definitely.
Focusing on what they can control.
Right.
Did they mention any specific growth targets or financial goals?
Right. No specific numbers, but they stress their commitment to consistent, profitable growth.
So quality over quantity.
Right.
Slow and steady wins the race.
Sometimes, yeah.
Did they discuss any potential acquisitions or partnerships that could help them grow faster?
They didn't mention any specific merger or acquisition activity, but they didn't rule it out either.
Yeah.
They emphasized they're always looking for opportunities that could benefit the business and their shareholders.
So keeping their options open.
Yeah, exactly.
Smart move.
It is.
Now, one question that often comes up is corporate social responsibility and sustainability.
Yeah, those are important topics these days.
Did Tilly's mention any initiatives related to environmental or social issues?
They didn't dive too deep into it, but they did mention their commitment to ethical sourcing and responsible business practices.
Okay, so they acknowledge the importance of those issues.
Yeah, they do.
But maybe they're not, front and center in their current strategy.
Right. It's something to keep an eye on.
It is. Investors are paying more attention to these things.
Absolutely.
Okay, let's talk competition. Tilly's operates in a pretty crowded space, especially in that teen and young adult market.
Yeah, lots of competition.
Did they talk about any specific competitors or competitive threats they're facing?
They didn't name any names, but they acknowledged the competitive pressures in the teen and young adult apparel market.
Okay.
They highlighted the importance of standing out, offering something unique.
Yeah, got to differentiate yourself.
Right.
So what strategies are they using to maintain that competitive edge?
They're focusing on delivering a great brand experience, offering a curated selection of brands and products, and providing excellent customer service.
So the classic retail formula.
Yeah, but it still works.
It does, if you do it well.
Right, exactly.
Did they mention any specific initiatives to boost customer loyalty or engagement?
Not really, but their focus on differentiation suggests they're looking for ways to build stronger connections with their customers.
Yeah, building that loyalty.
Yeah.
It's so important these days.
Absolutely.
Okay, let's talk about risk.
Okay.
Every business faces risks.
Right.
What did Tilly's identify as some of the key risks they're facing?
Well, they talked about the uncertain economic environment, the potential impact of inflation, rising interest rates, and of course, that possible recession.
Yeah, those are the big, scary macro risks that everyone's worried about.
Absolutely.
It's like trying to predict the weather,
Yeah, exactly. Unpredictable.
You can make educated guesses, but you never know for sure what's going to happen.
No, you don't.
Any other specific risks they mentioned?
They also talked about supply chain disruptions.
Ah, yes, those ongoing supply chain headaches.
Yeah, they could affect Tilly's ability to get products on time and at the right prices.
It's a constant challenge these days.
It is.
Did they talk about any strategies for mitigating those risks?
They said it's all about being flexible, collaborating with suppliers, and managing inventory carefully.
Okay, so being adaptable and proactive.
Right, ready for anything.
And they're also working on diversifying their sourcing.
Yeah, not relying too much on any one supplier or region.
Makes sense. Spread that risk.
Definitely.
Okay, let's talk about the management team.
All right.
What's your take on their leadership and their ability to, actually make this plan work?
They've got a lot of experience in the retail world.
Yeah.
They've shown they're willing to adapt and make tough decisions.
So, battle-tested and ready for a challenge.
Yeah, that's a good way to put it.
Well,
They're also very transparent in their communication, and they seem committed to, talking to investors and addressing their concerns.
that's always a good sign.
It is. Transparency is important.
It builds trust.
Yeah.
Okay, as we wrap up this part of our deep dive, let's recap the key takeaways for investors.
Right.
What should they keep in mind when evaluating Tilly's as a potential investment?
I would say focus on their progress in turning around those sales, how well they manage inventory, and their success in cutting costs.
It's all about execution.
Right.
Can they actually deliver on their promises?
Yeah, that's the key question.
What are some specific indicators investors should be watching?
Keep an eye on their comparable store sales performance, their gross margins, and their progress in reducing those SG&A expenses.
The bread and butter of retail.
Yeah, the fundamentals.
Okay, we've been talking about all of this from a fundamental perspective.
Right.
But our listeners always love to hear our not financial advice take on potential trading opportunities.
Yeah, let's have some fun with that.
Ready to put those speculative hats back on?
Let's do it.
Remember, everyone, this is purely hypothetical, just for entertainment.
Right, not financial advice.
All investments have risks.
Absolutely.
Okay, so given Tilly's current situation, what are some out there, but maybe plausible, trade ideas that a risk-tolerant investor might consider?
Okay, let me throw one out there.
I'm all ears.
How about a merger arbitrage play?
Oh, interesting. You're thinking Tilly's might get acquired.
Right, we've seen a lot of consolidation in the retail sector lately.
We have, yeah.
And Tilly's could be a tempting target for a bigger retailer or a private equity firm.
Yeah, someone looking to expand their reach in that teen and young adult market.
Exactly.
So betting on an acquisition.
Right, which could be a big win for Tilly's shareholders.
It could be, but of course, it's highly speculative.
Absolutely, highly speculative.
No guarantee that it will actually happen.
No, just a thought experiment.
Any other crazy ideas?
Well, how about a short squeeze play, but on the puts?
Ooh. Okay, so betting that the negativity around Tilly's will reverse.
Right, leading to a jump in the stock price and a squeeze on anyone who shorted the put options.
So using the options market to amplify those potential returns.
Yeah, exactly.
Clever. But remember, folks, options trading can be complex and risky.
Very risky.
Got to understand what you're doing before you jump in.
For sure.
All right, that wraps up our not financial advice segment for part 2.
Yeah, good stuff.
Just some fun theoretical scenarios.
Right.
But always remember to approach the markets with caution.
Definitely.
Do your research.
Absolutely.
And talk to a financial advisor before making any decisions.
For sure.
Now, let's zoom out a bit and consider Tilly's journey within the bigger retail landscape.
Okay.
What can we learn from their experience? And what does it tell us about the future of retail?
I think Tilly's story really underscores how important it is for retailers to be adaptable, agile, and laser-focused on the customer.
Yeah, it's a constant reminder that even well-established brands need to keep innovating and evolving.
Absolutely. They can't just rely on their past successes.
No, got to keep moving forward.
For sure.
Okay, so what else?
They also need to be incredibly focused on operational efficiency and cost control to navigate the challenges of this market.
Makes sense. Every penny counts.
Yeah, absolutely.
And perhaps most importantly, they need to cultivate those strong relationships with their customers.
Right.
Create an experience that truly resonates with them.
Absolutely. Brand loyalty is more valuable than ever.
In a world of endless choices.
For sure.
Now, as we wrap up this part, I want to leave our listeners with something to think about.
Okay.
What do you see as the biggest challenge and the biggest opportunity facing Tilly's in the years ahead?
I think their biggest challenge will be dealing with all the uncertainty in the economy.
Yeah.
And the fierce competition in the retail industry.
It's a tough environment out there.
It is, no doubt about it.
So they need to stay agile.
Yeah.
Focused on execution.
Absolutely.
What about their biggest opportunity?
I'd say it's leveraging their brand recognition, their loyal customer base, and their evolving merchandising strategy to really grab a bigger piece of that teen and young adult apparel market.
So a story of resilience, adaptation, and maybe even reinvention.
Yeah, exactly.
It'll be interesting to see how their journey unfolds.
It will be.
All right, everyone, that wraps up part 2 of our Tilly's Deep Dive.
Good stuff.
Join us for part 3, where we'll wrap things up and share one last wild, not financial advice trade idea that'll blow your mind.
Sounds good.
All right, we're back for the final act of our TalkTickers deep dive into Tilly's.
Time to wrap things up and leave our listeners with something to chew on.
You got it. So let's zoom out for a second, look at Tilly's performance, but in the context of the wider retail scene.
Okay.
What does their story tell us about the future of, the whole retail industry?
I think Tilly's struggles with those traditional brand partners are super interesting.
Yeah, we're good.
It kind of suggests that a lot of those big established brands, they're having trouble keeping up, Consumer tastes are changing so fast, and that huge shift to online shopping.
Right, so it's like those brands are, dinosaurs or something.
Yeah, struggling to adapt.
Not quite built for this new world.
Exactly. And that means retailers like Tilly's, who depend on those brands, they got to be more nimble, more flexible.
Yeah, for sure.
Got to diversify, maybe find some fresh up-and-coming brands to partner with, or even really focus on their own private label product.
Makes sense. It's like, you got to have your finger on the pulse of what people want and be able to change direction quickly.
Absolutely.
No more sticking to the old playbook.
No, the game has changed.
It really has.
What other trends are you seeing out there that kind of connect to Tilly's story?
Well, their focus on inventory management is a big one.
Right.
Like their whole plan to reduce those inventory commitments and speed up their turnover rate, that's definitely a sign of the times.
Yeah, a lot of retailers are doing that, being more cautious about overstocking, especially with the economy feeling a bit wobbly.
Yeah, no one wants to be left holding the bag when the music stops.
Exactly. It's about managing that risk.
It is, for sure.
And then there's that whole aggressive cost-cutting thing they've got going on.
Right.
They're looking at every single expense, renegotiating contracts, streamlining operations. It's like they're battening down the hatches.
Yeah, like a ship preparing for a storm.
Totally.
Yeah.
With costs going up and margins getting squeezed, retailers have to find ways to be more efficient.
You can't just keep raising prices forever.
No, you can't. Customers will push back.
They will.
Now, we've talked a lot about how Tilly's is pinning their hopes on this revamped merchandising strategy to turn things around.
Right. They're putting a lot of faith in it.
What do you think? Are they on the right track with this?
Well, I think going back to basics, focusing on those key items and making sure they have plenty of those core products in stock, that's a solid move.
Yeah, I agree.
It shows they're not just chasing fads, but really thinking about what their customers consistently buy.
Right, providing those reliable staples.
Exactly. And it seems like they're really putting in the effort to understand their target customer,
Yeah.
crunching the numbers and using that data to make decisions.
Yeah, data is king these days.
It really is. Got to use that information.
Okay, so we've touched on their digital strategy, their e-commerce operations, and the fact that they're putting more money into digital marketing.
Right.
Where do you see this whole digital thing going for them?
Well, I think they've got to keep investing in their online platform, make it super user-friendly, engaging, keep up with all the latest stuff like mobile optimization and personalization.
Yeah, and using social media effectively.
Oh, yeah, that's huge these days.
It is. Got to be where your customers are.
They've got to create that whole online experience that's just as exciting as walking into one of their stores.
Absolutely. Make it a destination.
And let's not forget about those brick and mortar stores.
Right. Those are still important.
They are. How do you see Tilly's balancing these big digital investments with the need to keep those physical stores strong?
That's the million-dollar question.
It is, for sure.
They've got to find a way to make those online, offline channels work together, Use the stores to showcase their brand, offer that personal touch, maybe even use them to fulfill online orders more quickly.
Right. So it's about recognizing that customers shop in different ways and making sure the experience is smooth no matter what.
Exactly. Omni-channel is the buzzword.
It is, and it makes sense.
Yeah, it does.
Okay, so I think it's time for the main event, the moment you've all been waiting for.
Haha, here we go.
Our not financial advice segment. Are you ready to unleash your craziest trade idea yet?
I'm ready. Let's do it. But first, got to remind everyone, this is all hypothetical, purely for entertainment purposes.
Right. We are not investment advisors.
Absolutely not.
And all investments come with risks.
Big time.
We're just having some fun, exploring some crazy possibilities.
Right, that's it.
Okay, so hit me with your wildest idea.
Okay, imagine this. Tilly's, they're in a tough spot. Their stock is down. The future's a bit murky. But what if this is actually the perfect setup for a super high-risk, high-reward play?
I'm listening. Tell me more.
What if we bet on Tilly's becoming like the next big thing in teen fashion?
Okay, I like where this is going.
We go all in on call options, betting that their new merchandising strategy is going to be a huge hit, their cost cutting is going to pay off big time, and their stock price is going to go through the roof.
That is bold.
It is. But hey, stranger things have happened.
They have. Remember GameStop?
Exactly. We could be talking about a 10-bagger here, but of course, this is all speculation.
Oh, yeah.
A very real chance Tilly's keeps struggling, and this whole thing goes up in smoke.
Right. High risk, high reward.
Exactly.
But hey, sometimes you got to swing for the fences, right?
Sometimes you do.
But seriously, everyone, this is not financial advice.
Not at all.
Do your own research, understand your risk tolerance, talk to a professional before making any decisions.
Absolutely.
Well, I think that about wraps up our deep dive into Tilly's. We've covered a lot of ground here.
We have. It's been fun.
We talked about their financials, their plans for the future, all the big trends affecting the retail world.
Right.
We've analyzed the challenges, explored the opportunities, and even had some fun with those speculative trade ideas.
Just for fun, of course.
Of course. We hope you found this deep dive insightful, informative, maybe even a little bit entertaining.
Yeah, that's the goal.
Remember, this is just our perspective. We always encourage you to do your own research, form your own conclusions, and never stop learning.
That's the key.
It is.
Thanks for joining us. And until next time, happy investing.